Hello everybody, welcome to today's video. In today's video, what we're going to go over a couple of currency pairs, how we anticipate them to play out during the week. Obviously the technicals and the fundamentals. As we've just cleared the first quarter of the year, I've posted my results on all my socials. We had an amazing quarter, over 22% in gains with the 1% risk per trade. So it's beautiful. It's beautiful. Most of the trades I did share them in my free Telegram group. If you're not in it, the link is in the description. Feel free to join. So without further ado, let's dive right into the video. We're going to start off with the fundamentals. The fundamentals of the week. I use investing to look at my fundamentals. It's going to be a bumpy week. Obviously, as we know, it's the first week of the month. So there'll be a lot of fundamentals. We're going to start on Monday here, April 3rd. We're going to have manufacturing PMI for the pound, ISM manufacturing PMI for the US. I don't really consider them strong fundamentals, although they're labeled for strong fundamentals. They don't really have that long lasting impact in the market, so I don't really consider them, that of much effect. However, if you do have a trade whenever they're coming around, you should at least be at break even. And if you're not yet at break even, consider reducing your risk on the trade. So on Tuesday, you see we have interest rate for the Aussie and interest rate for the New Zealand dollar, probably the most strong fundamentals of the week and the most volatile of the day. Like, this will cause so much volatility. The interest rate of the pound, of the New Zealand dollar, and the interest rate of the Aussie dollar. So it's going to be crazy on Tuesday. On Wednesday, we're going to have ADP, non-farm employment change for the US, which is a great indication for the non-farm payroll, which will come later on Friday. And then we have crude oil inventories for those that trade oil. This is a great fundamental for you guys. On Wednesday, you should be alert with that. On Thursday, we're going to have employment change for the CAD, right? So as you can see, I'm just going over the strongest fundamentals that I believe will have that impact in the market to actually last long. So you have employment change for the CAD on Thursday. On Friday, it's Good Friday. Obviously, all the banks will be closed. However, we are still going to have non-farm payroll for the US dollar. So on Thursday, before the markets close, it's a good idea for you to close all the US trades, or if not, you don't want to close them, at least be at break even, because most definitely or most likely the market on Monday will open with a gap, right? And that will all depend on how this non-farm payroll will come out. By the end of the week, I'll create another video to actually show you on how you can predict the direction of the non-farm payroll. So if that sounds interesting, please subscribe and turn on that bell notification so that you'll be notified whenever I release that content. Now, that's all I can say about the fundamentals of the week. Obviously, we can see there are a lot of fundamentals. Every day we're going to be facing a fundamental. So it's obviously going to be packed with volatility and crazy moves. So let's see how it will keep on playing out on the technicals. So on the technicals, we're going to start with DXY. DXY, obviously, we see the month has just closed with this bearish kind of candle. So obviously the trend was bullish, is still bullish, and we were anticipating to see prices keep on pushing higher after the break of this structure, break, retest. We were considering to see prices keep on pushing higher. However, we also need to acknowledge the fundamentals that are going on around the world. First, if we look at the candle, we can see the monthly candle is an inside bearish candlestick, which is an indication that prices have a possibility to push lower. Secondly, most of the countries have withdrawn from using the US dollar. That includes Russia, China, right? Almost many countries are actually withdrawing from using the US dollar. That will leave a negative impact on the US dollar. That will make it lose its value. So for the coming foreseeable week or two, I'm expecting to see the US dollar keep on dropping, losing its value as current countries are actually withdrawing from using it. So it's much more of a fundamental approach rather than a technical. but the fundamental is actually much more stronger than the technical. So I believe that will actually move the fundamental, will actually move the market. So what I'm anticipating to see on the US dollar is prices break below this, retest before we actually see a continuation to keep on pushing lower. So this is what I'm honestly anticipating to see the US dollar do for the coming week or two. Obviously, this will be the first targets once prices break below here. Second targets will be here, third and fourth all the way down here. So, and obviously, as we know that the US dollar is inversely correlated to the Japanese yen. So once the US dollar dumps, this will actually take off. And as we can see right now, prices are creating some kind of an inverse head and shoulders pattern. Some kind of an inverse head and shoulders pattern. We have a left shoulder head and this being the right shoulder. So we should be anticipating to see prices break above, push higher, and obviously these points up here being probably the first targets for the DX, for the Japanese yen or JPY basket, right? So obviously understanding the pair correlations, we are just going to go over fast how we anticipate the rest of the pairs to play out. If you haven't seen all the other pairs or the video in which I talked about pair correlation, I'm going to link it somewhere up here. You should be seeing it somewhere up here. So we are going to just go over fast based off pair correlation, how we should be anticipating to see prices play out, let's say this coming quarter, right? DXY, we're anticipating to see prices fall. So obviously USD CHF, we're anticipating to see prices fall as well because it's positively correlated with the US dollar. And we can see the trend is actually bearish as this low was taken out. And last month, prices closed with the bearish candlestick. So we should be anticipating to see prices keep on pushing lower on USD CHF. Excuse me. Same thing applies with USD JPY, inversely correlated to DXY. So DXY dumps, positively correlated with DXY. So DXY dumps, obviously this one also dumps, plus it has created a head and shoulders pattern. So we should be anticipating to see prices keep on pushing lower on this currency pair, right? Cool. Euro USD, inversely correlated with the US dollar. So as we can look at the monthly, we're seeing prices closed with some kind of a bullish candlestick, indicating that the bulls are now taking over. The technicals, however, still indicate that the bears have a great opportunity to push lower. But if we consider what's really going on the fundamentals of the world, we obviously understand like the US dollar has no chance against the euro. So we should be seeing prices push higher. So this approach is much more of a fundamental, as I said at the beginning of the webinar. CHF JPY obviously last month closed with a doji after a bullish run. So we should be anticipating to see prices fall, obviously, and it's inversely correlated with JPYX, and JPYX is taking off, so that should be falling. This is GBP USD. We are anticipating to see prices break above that and push higher all the way until up there. For the US dollar, it's much more of a fundamental approach, guys, rather than a technical approach. However, after a week or two, once prices have already changed their formation, their structure, we should let the technicals also kick in. Gold, I'm also anticipating to see prices break above that and keep on pushing higher. JPY, Euro JPY, prices closed with a doji, a lack of momentum. We should be seeing prices push lower all the way until somewhere down there. GBP JPY, prices closed with a doji, lack of momentum. We should be seeing prices fall all the way until somewhere down there as the first targets, obviously. CAD JPY, an inside candle. Obviously, we should be looking for prices to fall, fill that week, and obviously continue the trend until this market structure. So, guys, that's all I've prepared, roughly what I'm anticipating to see play out during this coming quarter. So if you've liked the video, please do like, share, subscribe, turn on that bell notification so that you'll be notified whenever I release content like this in the future. Without further ado, I appreciate you. Take it easy out there. Let's have a great quarter. Let's kill.